Welcome back, everyone. This is your sign not to sell your APLD. Seriously, this is your sign to hold strong, not to panic, and not to paper hand your position. What's up, trend friends? Today we're breaking down APLD through 3 different lenses: the what, the where, and the why. And we'll also analyze exactly what's going on with this stock right now. So before we dive in, make sure to hit that thumbs up. And now let's get into it. This content is for informational and educational purposes only and should not be considered financial, investment, or trading advice. I am not a licensed financial advisor, and nothing in this video should be interpreted as a recommendation to buy, sell, or hold any securities, including APLD. All opinions expressed are based on personal research and are subject to change without notice. Investing in stocks involves risk, including the potential loss of principal, and past performance does not guarantee future results. Always do your own research and consult with a qualified financial advisor before making any investment decisions. By watching this content, you agree that you are solely responsible for your own financial decisions. Now, this is a ticker that has been extremely volatile, and I think that sums it up perfectly. We've seen massive swings, huge moves to the upside and downside, from around 21 up to 42, then dropping back to 25, climbing again toward $39, and repeating this cycle over and over. This is a stock that I am extremely bullish on in the long term, but it's very important to compartmentalize your outlook when analyzing a stock like this. What do I mean by that? Sometimes I make videos that may sound bearish in the short term when it comes to APLD, but that does not change my long-term perspective or my belief that this can be an incredible company over time. At the same time, it also doesn't take away from the fact that I do expect short-term volatility and potentially even downside movement. The best way to think about this is with a simple analogy. Imagine you know that Wednesday is going to be a great day. Everything is going your way. You're free and life is good. But Monday is packed with stress. You've got work, appointments, errands, and a ton of responsibilities. Just because Monday is going to be difficult doesn't mean Wednesday won't be amazing. The same concept applies to the stock market. Short-term pain does not cancel out long-term potential. Unfortunately, many investors let short-term price movements shake their confidence and distort their long-term conviction. They start using the current stock price as the main indicator of where they think it's going, instead of focusing on fundamentals. And right now, let's be honest, the broader market conditions are not great. They're actually pretty rough. We're seeing significant pressure across the board, and this is something I've been talking about for a while. The market has been trending downward, and macro conditions are playing a big role in that. But here's the important part. Historically, every major downturn has created incredible buying opportunities for companies that can survive the storm. So what determines whether a company can survive a downturn? The number one factor is profitability. If a company is profitable, it has a much higher chance of making it through tough market conditions. If it's not profitable, then the next key factor is cash on hand. How much runway does the company have? In the case of APLD, this is where things get very interesting. The company has approximately $2.1 billion in cash and is burning about $50 million per quarter. That gives them around 131 months of runway. That's over 10 years of cash available. Think about that. This company does not need to go back to the market to raise capital anytime soon. They have the resources to survive and continue building. This reminds me of a famous perspective shared by Jeff Bezos during the dot-com crash. Amazon stock once dropped from around $130 to just $6 in less than a year. But while the stock price was collapsing, the internal metrics of the business, customers, efficiency, operations, were all improving rapidly. Bezos emphasized that the stock is not the company, and the company is not the stock. That distinction is critical. The market can misprice a company in the short term, but fundamentals eventually win. So ask yourself, does this situation sound familiar? Because it should. APLD may experience further downside in the short term. It could drop, it could fluctuate, and volatility is absolutely still on the table. But one thing remains clear. When market conditions improve, This company has the tools, the capital, and the positioning to potentially return to higher price levels, possibly back into that $30 to $40 range over time. So the real question becomes, why sell at $25 if you believe in the long-term upside to $40? That's the key takeaway. Short-term fear should not override long-term conviction. Anyway, that's today's video. I wish you all the best of luck, and listen, I genuinely enjoy making APLD content, but one of the reasons I slowed down was because the engagement wasn't where I wanted it to be. So here's the deal. If this video gets over 100 likes, I'll continue making more APLD content. If not, I'll pause the coverage. Also, if you're interested in trading alongside experienced traders, you can check out our Discord, where members share results, strategies, and daily trades. We've seen people post strong gains, positive feedback, and real progress from following along and learning. So if you found value in this breakdown, make sure to like the video, subscribe to the channel, and stay tuned for more content.